You all able to hear me now? Am I now clearly audible, visible? Seems yes. Okay. So everyone in the class, sorry for the delay, very good morning. Now I think I'm clearly audible, visible. Great. Thank you so much for letting me know. Archana, good morning. Thank you so much everyone for letting me know. I was asking how are you people. I was wondering, I'm asking how are you and no one is replying. So please tell me, how are you? How is life? How is everything? So I was planning to come up with a strategy for May 2026 because now is the right time to really get started, but that will be in English language. So let's see what happens. All good, Priyanka, Arjun, all good, Shruti, all good. Yes, what were we doing in the class yesterday? Sir, the concept, in terms of concept, we did not learn anything yesterday. But in terms of question, we did solve some practical question by drawing them on the timeline, especially question number 14. This question is typical in nature, as I said, because it does not, apply any particular concept of valuation. It simply is based on the formula of sustainable growth rate. Yes. And for that, we prepared a financial statement. And based on the financial statement, we people did the solution of this particular question in this manner. My first question, and a very important question, every live and recorded people. What happens is that we do the things in the class, then at the end of every day, you have some 2 questions around at least that you have to solve at home. Either completely homework or in the class we have done on Calci, you have to do at home in the notebook by writing it down. If you not do it on a real-time basis, then things will compile and at the end you will end up leaving them as in not doing them in the notebook, which is a major risk we take. So my request to you all, my instructions, my order to you all from today onwards is that use this weekend. See, it was the first week, so we understand. Use this weekend to make sure all your older backlogs are completed, right? And then from coming Monday onwards, on an everyday basis, you will have to complete the classwork and homework question of that day in the notebook on that day itself. It gives you a better understanding. Are you people aligned to me on this? Please tell me. Come on. Are you people aligned to me? What do you say? Archana says, sir, badhiya. Badhiya is the word. Yes. You have to at any cost do it, recorded people, there's no scope. As I said, if you plan to not write down the questions, kindly take the refund. It's all fine, but I cannot accept this. Definitely. Shruti, I didn't receive an answer from you. Definitely. Yes. Perfect. Now, shall we have some quiz? Everyone. Shall we have some quiz? The question is there, but I'm not expecting you'll be able to answer that question. That's unfair actually to ask you that question. It'll be, I think, out of the box actually to ask that. That relates to the concept of DuPont analysis. Shruti, no, it's really out of the box. I mean, even if you don't answer it, it won't be your fault. I give you a quiz. You solve it not right now, but at home. Try to do it. Let's try to figure out if we are able to think in that direction or not. Write down this question, or maybe I'm writing it down. You take a picture of it. Sir, why do I feel like teaching it to you know what? Although no practical question has been there in the curriculum, right, on that topic. But the theory is there. And ultimately that theory make uses of these formulas which I'm speaking. So let's try. It won't be, I mean, as a regular batch student, you deserve to know that. Okay? Something extra, something beyond. Sir, there's a particular company whose people, do you know what is asset turnover ratio? Just a second. You do write it in your notebook, not here. You do write it in your notebook, not here. This company whose asset turnover ratio is 2 times. There's a company whose equity multiplier financial leverage, we also call it equity multiplier ratio. The formula of which I will tell you, the formula of which is assets of the company divided by equity of the company. Suppose the equity multiplier of that company is 1.5 times. Okay. And then let's say net profit margin of the company is, give me a minute, let's say 8%. Okay. Then let's say the company has a retention ratio of 60%. Using this data, you have to calculate sustainable growth rate. Oh my God. So what are you saying? What kind of question is this? No number has been given. It is all ratios and ratios and ratios only, where I say asset turnover ratio is 2 times. Financial leverage, which is assets divided by equity of the company, is 1.5 times. Net profit margin is 8%. You have to calculate sustainable growth rate of the retention ratio is 60%. My first question to you is the question clear to you all? What data is given? I'm not expecting you to solve it right now, but I'm just trying to ask you, is the data clear? Come on. I mean, this is quite a harder level of quiz. I can't even expect that you'll be able to do it now. Thing is easy, just that the concept remain untaught to you. So far as I remember, it was there in CFA L1. It is there CFA L1, I'm sure. CA interlevel, I don't think there is any concept. Cool. And promise me you won't give this question to ChatGPT. Okay? Perfect. Before you go home and solve it, are the 3 formulas individually clear to you? Do you know what is the formula of asset turnover ratio? Yes, sir, we did it yesterday. Assets in the turnover, sales or revenue in the numerator divided by average assets in the denominator. Okay, so sales divided by assets is the formula. Sir, assets divided by equity is the formula of financial leverage or equity multiplier. Sir, if you realize this automatically become a terminology for you to remember. Yes, no? Automatically this become a new terminology for you to remember, called as equity multiplier or financial leverage ratio, right? Next is net profit margin. Are you people clear with the formula? Sir, next is net profit margin, which is net profit divided by sales of the company. Using these 3 formulas and using retention ratio to find out the sustainable growth rate, it is actually a challenge rather than a quiz. Will you all, without any external help, try to crack it at your own, everyone in the class? There's a student Vikas asking if all the questions of the study material has been covered or not. Let me give it this clarification, not just to Vikas and everyone else sitting here, not just a study material Vikas. Those who cover only study material question are preparing, in my understanding, only 50% or max 60%. Rest of the 40% question come to you from the past exam papers, from the RTPs, from the MTPs, from any other publication, but not a study material. So this book has a compilation of all relevant questions from all these sources which I talked about, meaning to say it is far beyond a study material, it is all comprehensive. If you are looking to solve any question by the institute, released by the institute, then this is the book, nothing else you will have to ever refer to. Vikas, could I answer your question? Others, have you taken a picture of it? And whenever you're taking a picture, let me know, I'll make a smiling face. Yes. All set. All set, all set, all set. So boss, now let's get started for a really interesting concept for which we gonna go to the out notes. Are we all ready for that? Everyone, are we all ready? So hit the like button. We are now getting started with a fresh concept called as variable growth model. Variable growth model. Sir, what happens? What happens? Not There are three models now so far we have read. One was zero growth model. Second was constant growth model. Third is variable growth model. So let us everyone in the class, let's try to understand when are these different models applicable. Sir, let's say I have a particular amount of dividend to be received at the end of first year. And same amount will continue to be received till infinity. Can anyone in the class please tell me which model you gonna apply? Come on. Which model you gonna apply, people? Come on, come on, come on. Answer this question to me. Sir, same amount of dividend till infinity. Then it is obviously constant dividend model, which is zero growth model. Agreeing you all to it? My next situation. Dividends of the company grow at a constant rate, which means my dividends keep on increasing at a constant rate until infinity. They keep on growing. My next question is, which model of dividend valuation will you apply here? Let me in the meantime answer one more question. I'm expecting all of you to answer this question. So there's a student, Venku College, what is difference between a 240-hour batch and a regular batch of 200 hours, right? Venku, let me explain. Or Venku, I'll be able to better answer this question on WhatsApp. I know you have sent me a WhatsApp. Venku, just wait for a minute. I'll give my WhatsApp number right now here, right? Over there, you WhatsApp me. I'll answer that question. Okay, in a better way. Got it? So WhatsApp me again so that I have this reminder. So Priyanka and Harshita says, sir, it is a constant growth model. Agreed. My next question, my next situation to you. Dividends of company are growing, but they are not growing at a constant rate. Sometimes they grow at a very high rate, sometimes they grow at a normal rate. Sir, if the dividends are growing, but the growth is not constant, the growth is variable, then that is when we apply variable growth model. Is the applicability of the concept first of all clear to you all? Everyone, is the applicability clear? What do you say? Yes, no? Yes, people? Yes. Sir, for example, let's say at 0 point I have a dividend of rupee 100. My cost of equity, the discounting rate is 12. Archana, let me give you an example, you will automatically understand. Suppose in year 1, the growth of my dividend, let's say, will be 10%. In year 2, the growth of my dividend, let's say, will be 15%. In year 3, it will be 12%. In year 4, it will again be 10%. Then in year 5 and onwards, it will forever be 8%. This is how my dividends are expected to grow every year. Is the growth rate constant till infinity? No, sir, I stand at 0 point. Where do you stand? Please don't forget. Where do you stand? Sir, this is where you stand. Okay. Perfect. This is where you stand at 0 point. And I see the growth rate till infinity is not constant, it is changing. But yeah, after a point I could see that growth forever become constant. That is what I see. Perfect. My question to you all is, what was fundamental principle of valuation? People in the class. All the recorded people, even if you are not in position to answer to me, at least you should have the answer to yourself, that what is the fundamental principle of valuation. It should run to your mind when I say fundamental principle of valuation is the present value of all future dividends discounted at K. Agreeing to you all? Perfect, sir. Sir, what are my future cash flows in this case? Sir, these dividends growing at a constant rate. But sir, is it possible to discount? these variably growing dividends using the Gordon's model? People, how many of you think that at 0 point if I stand, I can apply Gordon's model? How many of you think, sir, to discount these future cash flows, I can make use of Gordon's model at 0 point? Come on, everyone is supposed to respond to this particular question. What do you think? The faster you respond, the faster goes the class, which is very needed. Do you think Gordon's model can be applied at 0 point? No, sir. Because as we read, Gordon's model can be applied only to the situations where the growth rate people in the class is constant till infinity. If the growth rate is not constant, we cannot apply Gordon's. Sir, it is very well visible that growth rate in the initial years is not constant. So, okay, there must be a point on the there must be some point, or at the end of which year is my question, from where if you look at the future, you start to see a constant growth rate. Boss, at the end of which year, if you stand and look at the future, you'll be able to see a constant growth rate forever till infinity. Can you identify that point? Chavi, thought process may be correct, right? But this is not how we do it. We have a better and an easy way. Geometric mean, Chavi, is always an average. And when we have the methods to find a specific answer, hello, there is no need actually to do the average. Average is always an adjustment, a compromise to the main numbers. If we have some way to calculate that precise number, there is no need to do average. My question to you all is, at the end of which year do you think, if I stand and look at the future, my growth rate is forever constant? Sir, it seems that after 5 years, the growth rate is forever constant. Do you people agree to it? It seems so. So my point is, whenever everyone in the class, whenever you see any such question, very quickly prepare a timeline, because it is going to help you in the exam. So sir, let's prepare this thing on timeline. Sir, this is year 0, year 1, year 2, year 3, year 4, year 5, this is year infinity. Fine. The amount of dividend at year 0 is 100. Sir, does the amount of dividend of year 0 matter to me? No. No. It's not relevant. D1 matters to me. So accordingly, let's figure out how much is the growth. If I talk about the growth, just give me a second. Fine. Sir, if I talk about the amount of growth, this year it is 10%, then next year it is 15%, then next year it is 12%, then again 10%, then 8%, and then 8%. This is how the growth pattern is. So when I asked you a question that, okay, I understand that at 0 point where I stand, the growth till forever is not constant, but there must be some point, year end 1, 2, 3, 4, 5, there must be some point at the end of which, if I stand and look at the future, I will have a forever constant growth rate. And all of you could identify that it is at the end of 4th year from where the growth rate is constant. But sir, why are you identifying that point? Do you agree? When I stand here, I know that I cannot apply Gordon's here. But can I at least apply Gordon's model here, so that I can discount all the future dividends from this point onwards at least? Hello? Are you all able to connect to my thought process rather than directly teaching to you the formula? I'm trying to teach you the underlying background so that you remember the story and you never have to mug up this concept. Are you all able to connect to me? So at the end of 4th year, if I stand, I have a forever constant growth rate of 8%. And now this is the situation where if I want, I can apply the Gordon's formula. Sir, let's first of all, before doing that, find out the amount of dividends of future year. Sir, so 100, my first dividend is 100, plus 10% is 110. Sir, plus 15% is 126.5. Plus 12%, sorry, 126.5, plus 12% is 141.68 plus 10% is 155.85 plus 8% is 168.32 plus 8% is 181.78. This is how the future dividends are. Did you all observe something? There was a point of observation when we learn the things, it's really in detail. Sir, while adding the respective growth rate, I was rounding off the number to be written in the notebook, but I was not rounding off the number which was there on my calculator. The calculator number continued to remain as it is. I was just simply adding growth and then rounding it off for the purpose of notebook. For example, when I do 126.5 plus 12%, it is 141.68. When I do plus 10%, it is 155.848. I'm writing down 155.85, but in my calci, I keep it 155.848 and then simply add 8% growth to it, so it becomes 161.315, right? So I make it 168.32. For the purpose of notebook, you round it off, but on your calci, it continue to remain unrounded off and you keep on adding growth to it. Is my point clear to you all? This is how you will have to even solve the practical questions. Come on, come on, come on. Requesting your responses on this particular thing, you will have to respond. Come on. Could I convey what I'm trying to convey? Yes, please. Quick yes, no. So this we agree to, sir, that these are my future dividends. We also agree that, sir, I cannot apply Gordon's at zero model. I understand that we are standing here, right? What is the exact status of your face now? Is it like this? Hello? I want to see a really smiling face throughout the classes, people. So at 0 point I stand and I know that I cannot apply Gordon's model. But which point have you all identified? Sir, we have identified this particular point. Someone said, sir, we are smiling hard. Great. Sir, this is the point we have identified. Agreed, agreed. At this point, when you stand, at this point, when you stand and when you look at the future, you see that you have a constant growth rate forever. Which means I can apply Gordon's formula here and I can calculate the present value of all future dividends falling after this particular point, and by applying the Gordon's model, the value that you calculate is called as terminal value. Let me write it down. It's called as terminal value, and in exam you can refer to it as terminal value, TV. At the end of which year? At the end of fourth year. Terminal value 4 we calculate. Now you will have to answer my question. When I calculate using Gordon's formula intrinsic value of 0 point, I make it d1 divided by k minus g. Agreed, sir. Similarly, the same Gordon's formula, if I have to apply at the end of fourth year, can anyone please try to figure out how should the formula look like? How should the formula look like? If IV0 or value at 0 point is d1 divided by k minus g, so value at the end of fourth year, won't it be d5 divided by k minus g? Hello, people in the class? Won't it be d5 divided by k minus g? Agreement or disagreement? What do you all say? Shouldn't it be d5 divided by k minus g? You know, what do we more focus on? Not the formula, but understanding the formula. Can anyone in the class answer my most important question here? What is this terminal value for doing for me? Can you understand this and tell me what is this terminal value for doing? Terminal value for is doing to me. Can you understand and tell me? Sir, it is discounting my future dividends. My question is, future dividends from which point to which point it is discounting for me? Sir, this is the point of ultimate understanding. Sir, as I said, when you apply formula of intrinsic value 0, price 0, it is d1 divided by k minus g. It discounts all my cash flow from d1 till d infinity. D0, if you remember, as I said, is not discounted. I can take you back and remind it. As I said, it discounts from d1 to d infinity. D0 is not getting discounted here. My first dividend which gets discounted is d1. Similarly, here the first dividend which gets discounted is d5. So what is this doing to me? So this is this terminal value. Wait. This terminal value is nothing but doing present value of d5 to d infinity at year 4. Which means, are you people realizing, those who could think, Archana bringing all the future dividends from d5 to d infinity, okay, then SJ Jagde Jadage, I am not able to understand what's your name, SJADAGE, okay. All dividends from d5 to infinity is brought to PV at the end of 4th year, Priyanka. Priyanka, that's your, what should I call it? What's your first name? Is it Priya or Priyakan? What's your first name? I'm not able to understand. Anyways, because I've been calling you Priyanka for very long now. But people, if you are able to identify that, sir, it will bring all my future dividends from d5 to d infinity at 0 point. What I want to tell you is that, sir, do you people realize at 0 point what was my ultimate objective? To discount all the cash flows to point 0 till infinity. Agreed. In that, do you agree? From d5 to d infinity has been brought down to 0 point? Has been brought down to 4th year end. So if you realize, do you people agree? This value has 5 till infinity, everything already discounted. Which means I need to now manually discount the cash flows of next 4 years, dividends of next 4 years, including 4th year. Why? Because terminal value has not yet discounted 4th year of cash flow. Now I have to discount the terminal value also at 0.0. Boss, along with the dividends of next 4 years, including 4th year, remember, if I discount terminal value also at 0 point, I will end up discounting all future cash flow to 0.0, which is nothing but the value of share as per fundamental principle of valuation. So sir, let us discount, fine. Cool. So what you have to do? Sir, now when you discount all these future cash flows, the value that you calculate is called as intrinsic value at 0 point, which is nothing but the present value of future cash flow. Rather than teaching to you the formula, I believe in teaching to you the underlying theory, the underlying situation, which will automatically help you create the formula. Yes? Please tell me how much out of 10 are you people comfortable with the concept that I've delivered to you? Come on, super ultra fast, answer my question. Super fast. Now we need to speed up since the concept is already clear. How much out of 10 are you people clear? Priya is 10 on 10. Priyanka, sorry for very long I have been naming you as Priyanka. Archana is 10 on 10. Other recorded people, please tell me. Shruti says never. I was taught like this. No worries, Shruti, this is just the start. Over the time you will observe many things where we do things logically. Cool. So people, let me tell you one more thing. If I try to create a formula out of it, so can I say according to variable growth model, this is not the formula, this is just the understanding you write down for your revision actually. I mean, it's not a formula. So can I say, sir, intrinsic value at 0 point is present value at 0 point of dividend of first year, second year, that way till the dividend of nth year plus the present value, also the present value of terminal value of nth year. Let's suppose there is a year where we calculate terminal value, that year is n. So you take the dividend till that year, right from 1 to 4 you take the dividend if the terminal value is 4. If the terminal value is at the end of 5th year, suppose you take the dividend from 1 to 5. Are you people understanding it? A simple formula for you to revise, there's nothing to mug up here. Cool. Now let me take you all ahead. Sir, let's try to value the share. How will the presentation or how will the format look like? Really easy. A basic format. Sir, these are the years, right? So for example, my table will be 1, 2, 3, 4, 4. Sir, 1, 2, 3, 4, 4. Yes. And in year 4, I have two cash flow. This is first cash flow, this is second cash flow. The terminal value is one more cash flow which I have in year 4. So I have to create two columns for year 4. Sir, what is the nature of cash flow? Sir, I have D1 here, I have D2 here, I have D3 here, I have D4 here, and I have terminal value 4 here. This particular column you don't have to draw in exam. Not in exam. This particular column is just for your and my understanding in the concept notes. Perfect. Sir, what is the amount of those cash flow? Dividend of first year, as I see, is 110. Dividend of second year is 126.5 and then 141.68. 126.5 and 141.68. Yes. Then it is 155.85 and 168.32. So 155.85, right? And then 168.32 is D5, which will be used for calculating terminal value at the end of year 4. So 168.32 divided by K minus G. Okay, 168.32 divided by. Let's suppose the discounting rate given in the question is 12%, 0.12 minus G is 0.08. What is the forever growth now? What is the forever growth now? 8% divided by K minus G gives you what terminal value? So 168.32 divided by 0.04 is 4208 is equal to 4208. Perfect. Please validate the numbers. Please validate the numbers. What is present value factor at the rate of 10%? 1.1 divide equal to is 0.909 is equal to 0.826 is equal to 0.751 is equal to 0.683, and similarly what is the last one? What is the last one? Similarly is equal to 0.683 only. Please don't make the mistake of taking a new present value factor for 5th year. It continued to remain 4 year only, so the present value factor remain 4 year only. People, are you broadly clear? I have the cash flows for the next 4 years. I have the discounting rate applicable to each of the year, my expectation from you is you multiply the amount with the present value factor and calculate the discounted cash flow, give me a total of it. Yes, take a minute, do it, give me the answer and give me a minute also. Let me have water, just a minute. Yes. 3291.39 is the answer someone is saying. Someone will have to confirm it also. 3291.39. 3291.39. When you do this, you automatically learn the rounding off rules. For example, this is the number, this is the number. When you multiply, you have to round off only till 2 digits after decimal point. So I'm writing it here. Round off DCF till 2 decimal points. Okay, these small things you write down for your ease for the purpose of revision. Come on, someone else will have to please respond. Archana, ask your question. In the meantime, others do the calculation and give me the answer. Come on. Harshita, same answer? That's great. Perfect. Priya, Archana, ask your question. Sir, so this is finally the intrinsic value of the share. This was all fine, right? This was alternative one of solving it. Just give me a minute. Archana, let me take or let me answer this particular, let me teach you one more concept and I think your answer then automatically gets questioned. I mean your question gets automatically answered. Are you fine with it? Sir, in this case, in the present case that we have done, we have calculated the terminal value, boss. We have calculated the terminal value at the end of fourth year. Yes. I want to teach you one more method of doing it where we will end up calculating the terminal value at the end of third year. Sir, what are you saying? Yes, for example, let me bring it to you. Let me bring it for you all. The entire timeline here. Just a second. Just a second. Yes, perfect. The same timeline. Question remain the same. Question remain the same. That sir, at 0 point, where I stand, my dividend was ₹100. Dividend will grow at the rate of 10, 15 and so on percent at the end of every year. According my D1, D2, D3, D4, D5, D6 become this, right? You note down this much, you let me know in the chat box, then we all proceed ahead. Super fast, please note it down only till the point where I have done it. In fact, you may not note this one down, there's no need. Please note this down, waiting for you to do it. Archana, let me explain the entire thing. Then I'll answer all your questions. That is my commitment. Just waiting once you write it down, let me know. Once you draw this. This is so funny. This is so funny, everyone. Like, how would a normal teacher say to you? Once you have written it down, let me know. I have to say, once you have drawn it down, let me know. I mean, we have so many drawings in our class, and we will continue to have it throughout all our sessions. Especially from chapter 3 onwards, so many drawings. One or two is still somewhere formulas, then it's all drawings. So, sir, this is fine. If I ask you, listen to my question. At the end of which year, if you stand and look at the future, you will have a forever same growth rate. All of you will say, sir, at the end of 4th year is where we see the growth rate to be constant forever. Agreed. Agreed. So, agreed that you are saying at the end of 4th year, I will have a constant growth rate forever. Right? This is where, sir, we should stand. Wait. This is where, sir, we should stand. Agreed. But I want you to calculate the terminal value not at this point, but not at this point, but a year earlier than that, which means I want you all to calculate the terminal value at this point. 1 second. Sir, is it really possible or is it really logical to do calculate the terminal value at the end of 3rd year? Even if we see the growth rate till forever is not constant in the 1st year, there is some other growth rate, and then in the future years you have a different growth rate. So is it really possible to calculate, sir, terminal value 3? Sorry. Is it really possible to calculate terminal value 3? Let's see, sir, what will be the formula of terminal value 3? That you tell me first. Everything is there. Let me do some Shakti and all. Is it now visible? People, I have tried to chant some mantras and everything. Has it worked? People, am I now visible to you? Audible to you? What is happening? Yes, it's working, right? So just to tell you, I know all that as well. Okay, this was particularly for the students. This is particularly for the students who feel that, who take me lightly. Just to tell them that I know all this as well. Well, jokes apart, listen to me. Sir, terminal value 3 we know is D4 divided by K minus G. My question still remains, sir, is it really possible to calculate terminal value 3? We'll talk about it, but suppose we are able to. Let's say for now, let's assume that, okay, we can calculate terminal value 3 also. So, formula is also clear. That formula is also clear. Just 1 second. Since terminal value 4 was D5 divided by K minus G, similarly terminal value 3 will be D4 divided by K minus G. The point to understand here is what will terminal value 3 give to you? Sir, it will, people in the class, please understand, give to me the present value from D4 till D4 to D infinity at which year? At year 3 is what is it going to give me from D4 to D infinity, sorry. which means terminal value 3 will discount all the future cash flow from 4, 5 till infinity and bring everything to year 3, which means, do you agree, if I stand at 0 point, then I have to manually discount the dividend of first year, dividend of second year, dividend of third year also, because TV3 does not include the dividend of third year, it includes from fourth year, and then I have to discount TV3 which has everything from 4 to infinity, and that's how I'll be able to bring all the future dividends to point 0 based on this logic. I mean, everything remains same as the previous alternative. Only thing is that rather than TV4, we are using calculating TV3. Boss, I am yet to answer your question, sir, but how come TV3? That is all fine. But are you people understanding that what I'm trying to teach you now is exactly same as what you have already learnt in the previous alternative? Come on, tell me. I would want to do some decoration as well, and I understand that you don't have that facility to do the decoration in the notebook, but still, let me try. Sir, which means this way if I discount, do you people agree, I'll be able to calculate my intrinsic value 0 at 0 point, which is the present value of all future cash flows as per fundamental rule. From 5 to infinity, everything is discounted to TV3. Then I have manually discounted 1, 2, 3 and TV3 to bring the intrinsic value, to calculate the intrinsic value at 0 point. Sir, let's do the calculation in the notebook and then we figure out what is going on. Sir, year 1, 2, 3, 3. I have D1, I have D2, I have D3 and then I have terminal value 3. What are the cash flows? Sir, 110. Let me copy it from here. What are the cash flows? Sir, 110, then 126, then 141.68, and then TV3 will be 155.85, which is D4. 155.85 divided by what is K? 0.12 minus what is G? 0.08. So how much is the terminal value? Oh, video is getting stuck again and again, is it? Archana says the video is getting stuck again and again. Is that the case? Someone please confirm. So I have, for those who are not able to connect to me, I'm repeating it. Sir, D1, D2, D3 are the three dividends, and then terminal value 3, which is based on D4 divided by K minus G, is what we are trying to calculate. Okay, so 155.85 divided by 0.04 give me 3896.25. People, the present value factor for that is going to be again 0.751, right? Once you are sure with the numbers that this is what even you are getting, please give me the present value of future cash flows. I am on this particular part waiting for your responses. Come on, please, please, please. Just give me a minute now. Do calculate and give me the answer. What is the answer? 3236.971, is it? It's hard to believe. It has to be closer to this. It can't be that different. It's hard to believe. Archana, others please do confirm the answer, right? 3236.96 only. That is correct. 3236.96. Just a minute. Because generally saying we don't have a difference of even this much, frankly. Have I written down the present value? Did you all individually calculate this? Then I'm assuming even this number is correct. We just need to verify that the difference, see, logically I will justify to you, logically the two answers have to be absolutely same, right? If there is a difference, there are two possibilities. One, we have made some calculation mistake, which is what I'm trying to verify. Second, due to the rounding off, right? For example, if I take a present value factor, for example, 4208. Now, the present value factor is something, but I have rounded off the present value factor, which is why this number will make a significant difference because 4000 is a bigger number. When you multiply it with something which is rounded off, then it creates a bigger impact on the answer, which is why I just wanted to verify. Even this seems to be correct, even this seems to be the correct. The answer is different only because of rounding off, but you can connect that it is 3291 and it is 3236, which means a difference of not more than 55 something rupee, right? In a value of 3000, a 55 rupee difference is ignorable, right? 55 rupees around 1.5%, and that is also due to rounding off. My point is, sir, why is it happening that we are getting the same answer even if we do calculate the terminal value at the end of third year? And how is it possible to calculate terminal value at the end of third year where we know the growth rate is not constant? Boss, I'm not expecting you all to give me the answer. I'm expecting that you understand my question. That, sir, how the hell did you calculate the terminal value at the end of year 3 is the question. Where the Gordon says that this formula is applicable only when the growth rate is constant, but we observe that the growth rate is not constant from that point. Did you understand my question? Was requesting your responses. Come on, tell me. I will myself answer it. However, if you answer it, that will be great. But at this point, I have an expectation that are you understanding my question? Come on, tell me. Please, please, please tell me. Do you observe what is the difference between alternative 1 and 2? In alternative 1, we calculated the terminal value at the end of fourth year, which looked illogical because after then, the growth rate was actually constant at the rate of 8%. In alternative 2, I calculated the terminal value a year back rather than 4 from where the growth rate is constant. I rather calculated the terminal value at the end of third year where I know that for first year growth rate is something else and then forever the growth rate is something else is the situation I'm trying to address. That, sir, how is it possible to calculate terminal value at the end of third year, and we have tried to do it and we get the same answer except ignoring the rounding off difference. The answer is actually same, copy paste same. Why is it happening? Can anyone now try to think of the logic? Recorded people, live people, let me tell you, logic relates to something that you have already done in Gordon. So I'm giving you 2 minutes. Go back, turn your pages, go back, turn your pages, figure out where is the logic. Priyanka says, why are we not considering the 10% growth rate throughout, Priyanka? The question has clearly specified that 10% growth rate is only for year 4. Then from 5 and onwards, the growth rate forever is 8%, which is what we have drawn even in the timeline, and which is what we will have to continue to follow. The growth till forever is 8. 10% growth rate is only for 4th year, which means from 0.3 to 0.4. Are you understanding my point, Shruti and Priya? Could I answer your question? Now giving you all 2 minutes to go back and find out why is it becoming possible for us to apply Gordon's at year 3. Why is it logical? You go back. And I believe that you guys will be able to answer it actually. Priya and Shruti, could I answer your question first of all? Think. Welcome to the brainstorming session. 1 second. By the time you're thinking, let me answer a question. Priya, your answer is worried about why not considering this 10% growth throughout. Priya and Shruti, you people want to say that I should consider a growth rate of 10% forever. Is it? Is it what you're saying? Is this your question? First of all, you validate me that. Then I'll answer. Okay, you people want to say that sir, 8% is forever growth, that we understand. But since you are applying the terminal value here, right? In the formula of d4 divided by k minus g you take 8%, that we agree to, sir. But the problem is that, sir, this growth of 10% has got entirely ignored is your point. Is this your question now, Shruti and Priya? That this 10% growth rate has got ignored. Okay, I will answer that question. Let me tell you. In this formula, do you people agree that we are using D4? How do you calculate D4? Sir, it is D3 into 1 plus G. Agreed, sir? And what is the G being used here? Isn't it 10% of growth being used here to calculate D4? Hello? You use D4, which is 141.68. Hello? 141.68 plus 10%. Guys, 1 second, there is a voltage fluctuation actually. Hold on for a minute. There's some voltage fluctuation happening. So let me take a moment to explain. This D3 plus 10% growth rate which you thought is getting ignored is actually not ignored, because that is what has helped me to calculate D4. Do you realize it now? Are you able to understand? Am I able to answer your question now? That is why D4 is not getting ignored. And let me tell you, let me first, complete my discussion, and then you will automatically realize that your question gets answered. Sir, what was my question? How is it possible to calculate TV3? Archana, you have to an extent gone to the right direction. Harshita, I'm not able to understand what you were trying to say. Okay, but let me just a moment complete this. 1 second, yaar. I'm not sure. I mean, the class should not stop at any case. The voltages are down, which is why even the inverter is not working. The electricity has not gone. Wait. People, are you all able to see me? And you'll be really shocked to know one thing, that what you see me right now is all natural light. There is no artificial light in this room. It is all natural light which the camera is capturing and doing. Let me take a picture of it. Let me show it to my team. Nice, na? Yes, so back to it. So the point was, sir, actually, let me tell you, the voltage is really fluctuating, which is why the backup thing, the inverter is not working out because lights have not gone. One thing I can do is, give me a minute. Sorry for this disturbance. I will have to figure out that somehow we should continue the class. Okay. Give me 2-3 minutes. Let me figure it out. All right. Bye, people. All right. So we are back. We are all set. Are you people there? Everyone? Can I proceed ahead? Tell me. Are you people there? Can we proceed ahead? So I am really sorry for the last 5 minutes, but the point I want to now explain to you all is, are you all there? Shall I proceed? Yes. The question was really simple. Sir, how is it logical to calculate the terminal value at the end of year 3 despite knowing the fact that growth rate is not constant forever? In the first year it is 10 and then it is 8%. So how is it really possible to calculate the terminal value at year 3, or how is it possible to apply Gordon's model at year 3 was the question. Shruti, is the question clear? Everyone, is the question clear? Now let me tell you. Do you remember I said to be able to calculate the term, to be able to apply the Gordon's model at a given point, the growth rate has to be constant. Agreed? Yes, sir. The growth rate has to be constant from which point to which point is the main part. When I apply Gordon's model at 0 point, I want its growth rate to be constant, not from 0 to infinity, but from year 1 to year infinity. Are you understanding? Meaning to say, the growth rate from year 0 to year 1 can even be different. I just want the growth rate from 1 to infinity to be constant when I'm calculating the value at 0 point. Do you all, everyone in the class, have an agreement on it? Come on, tell me. And that is something which is being written, that is something which we had clearly understood, that G used in the formula is the growth constant rather than consistent. Make the word constant from d1 till d infinity. It can have a different growth rate from d0 to d1. That is what I want to tell you. So based on similar logic, people in the class, if I want to calculate terminal value 3, I would want to have my growth rate constant from D4 till D infinity. The growth rate from D3 to D4 can be something else as well. It will do, and I can apply the Gordon's model even at TV3, because from 4 to infinity at least my growth rate is constant. Could I answer your question, people in the class? Could I answer my own question, my own doubt which I created, that how is a TV3 also a logical thing? People, could I explain it? Please, please, please tell me. Come on, waiting for your responses. What do we say? How much out of 10 are you people comfortable with the logic that I've explained? And also the mathematical justification that I've done, that even TV3 gives you the same answer. Now you can try it for TV2, you won't get the same answer. Please, please, please. Tell me how much out of 10? If not 10, you can ask whatever is your doubt. Priya, your doubts gets clarified, right? Your doubts gets clarified that TV3 use D4. In your D4, that 10% growth is automatically considered, and then forever I need a constant growth rate 8%, which is considered here. And anyways my formula want the growth rate to be constant, not from that point itself but from next year onwards. Yes. So that was alternative 2. This is the level of conceptual clarity we wanted to attain. I mean, in this chapter throughout you'll observe that we have really focused on great conceptual clarity, and this will happen throughout AFM. This will happen throughout AFM. Archana, I didn't get a response from your IU site. Right? So sir, now the question is, if both of them are giving to us the same answer, when should we apply alternative 1 or alternative 2? Or sir, is it just the show off of your knowledge that you have done? Is it exam relevant also? The answer is yes, it is exam relevant. Sir, how come? We have to primarily apply alternative 2. But there will be some situation that I will guide you with time where you will have to apply alternative 2 also. So that I will take care of later, that I will explain later. But first of all, can we solve some questions where we have to apply alternative 1? Although both of them give you same answer, but we try to follow the alternative which institute follows, right? And for which I have cracked the thing that when does institute follow one alternative, when does institute follow second alternative. Let me tell you, this is a particular place where the students who have already taken the regular batches, who come to me to attend power batch just 2 months before the exam, that short duration batch, even they are not having this level of conceptual clarity that I'm discussing with you. That okay, there is something called as alternative 2. Okay, when do we have to apply alternative 2? Okay, we have to look at the growth of the dividends. As we go to the practical question, you will see a better application of this concept. Archana says the video is getting stuck. Is it getting for everyone? Because if it is getting for everyone, then that's my problem. If only to Archana, then that's Archana's problem. Meaning to say, you will have to figure out your internet thing. We are ready to wait for you. If it's doing for everyone, then it is my internet problem. I'll have to figure it out. How is it getting stuck? How is everything? 1 second. Just a minute. Okay. Does it happen every day or it's happening only today? People, please tell me. Does it happen every day? It's today only. Cool. Well, I have not changed any settings. Okay, so kindly bear it for a day. Kindly bear it for a day. Okay, so let's not waste time in all that. Kindly, since you are saying that it's not much, it's manageable, kindly do it. So let's now go to the practical question. We are now looking at the practical question, starting with the first practical question, which is question number. So let me tell you, question number 15 is something we can skip. A very older question, which is that too, which is not very relevant. Question number 16 is what we have to do, but only in the notebook, only in the Calci. Question 16th we gonna do now, but only on Calci. Okay. People, let's start to read the question. A company had paid a dividend of rupee 2.5 per share, had paid, it is D0, last year. Its required rate of return is 20%. What will be the market price of the share at the end of the year if there is no growth in dividend? Dividend is 2.5, which got paid, right? The same dividend will continue to be there forever since there is no growth. If the required rate of return is 20%, please tell me, everyone in the class, please tell me, what is the price of the share? I'm not explaining first of the part of this question. You have to understand it yourself. You have to answer this question yourself. I'm just waiting for you all. Come on. Please be faster. I'm waiting for you all, literally. Sir, such a common sense. If the dividends are constant, we say D1 divided by K as the formula. D1 is 2.5, K is 20%, answer is 12.5, agreed, sorted. So next, it is only on Calci question. You don't have to do it in the notebook at all. Just that conceptually you should be clear how to solve the question. Presentation, I am confident that you will be able to do it because there are more difficult presentations we will do in the class. Sir, dividend grows at a constant rate of 5% per annum in perpetuity. It changes to which particular model? Gordon's model, which is D0 into 1 plus G divided by K of 20% minus growth of 5%. In that case, what is going to be the answer? Please answer it. Archana says 7.5. Come on, others, waiting for your responses. Come on. 17.5, again, great, basic. Third, if dividend grows for the first 5 years, if the dividends are constant for the first 5 years, then grows at a constant rate of 5% per annum in perpetuity. First of all, identify which model is this. Is it a variable growth model in your opinion or not really? Is it a variable growth model? What do you all think? Or a Gordon's model only? What do you think? Boss, please observe for the first 5 years, if I have constant dividend, which means my growth rate is 0. And then if the dividend grows at the rate of 5%, which means I have two different growth rates. For the first few years it is 0%, then for the rest of the year it is 5%. If there are more than one growth rate, then such model is always a variable growth model. Is this clear to every single student? Are you finding it logical? Initial few years 0% growth rate, then forever a different growth rate, then it has to be a variable growth model. Whenever there is a situation of variable growth model, I say draw it on the timeline, life become really easy. Cool? Fine. 1, 2, 3, 4, 5, 6 and onwards. 1, 2, 3, 4, 5, 6 and onwards. Sir, dividend for first 5 years is going to be 2.5 only with zero growth. 2.5, 2.5, 2.5, 2.5. Then dividend will grow at the rate of 5%. So 2.5 plus 5% is 2.625. My question to you all is, if you have to apply alternative 1, at the end of which year will you calculate terminal value? Come on. If you have to apply alternative 1, at the end of which year will you calculate terminal value? Come on. Waiting for your responses. Sir, the point where I stand and look at the future, and if I see the growth rate to be constant, then that is where I apply terminal value. Do you agree? At the end of 4 years, if I stand, the growth rate forever is not constant. In the first year it is 0 and then forever it is 5. Then at the end of 5th year, boss, at the end of 5th year, if you stand and if you calculate terminal value 5, then we can say the growth rate till forever, everyone in the class is constant. Archana, Shruti, everyone else, those who are thinking 4 year is what we should calculate, then what is the logic, boss? Alternative 1 is what? Identifying the point from where the growth rate is constant till forever and calculating terminal value at that point. Isn't it 5th year end? Please answer my question. Yes or no? Please answer my question. Isn't it 4th year end, 5th year end? Hello? Recorded people, what's happening? Are you able to connect to my thoughts? Am I able to deliver my thoughts to you? What do you say? It's clearly, sir, 5th year end. So terminal value 5 will be, as I know, it will be D6 divided by K minus G. Sir, do we have D6? Yes. Do we have K? Yes, sir, given in the question directly. Do we have a forever growth rate? Yes, sir, of 5%. Please give me the answer of TV5 first of all. TV5. So 2.625 divided by K is 20%. G is 5%, so divide by 0.15. Give me 17.5 as my terminal value of 5th year. Agreeing to it? Aligned to it. So now I have to manually discount the dividend of next 5 years and TV5 also of 17.5 I will have to discount. Do you agree the next 5 dividends are same? Can I say it is nothing but an annuity? Same amount after same time interval for the next 5 years is annuity. So let me multiply 2.5 with the present value annuity factor of 20%. Sir, 1.2 divide 5 times equal to 1, 2, 3, 4, 5 and GT give me 2.9906 which is 2.991. Amount of annuity of 2.5 for the next 5 years means the present value annuity factor of 5 years for at the rate of 20% is 2.991 multiplied by the 2.991 multiplied by the amount of cash flow of 2.5 give me 7.4775 which is 7.48 on a rounded off basis. Then 17.5 gets multiplied with the 5th year factor. So 1.2 divide equal 0.4018 which is 0.402. So 0.402 multiplied by 17.5 gives me 7.04 on a rounded off basis. Someone please confirm I'm getting 7.04 as the answer. Someone please confirm I'm getting 7.04 as the answer. So 7.48 plus 7.04 give me 14.52 as the present value of future cash flow. Everyone, waiting for your responses. Are you all? getting the answer of 14.52, and are you all 10 on 10 comfortable with this easy question? What do we say? Come on. Archana, let me answer what you're saying. Cool. Archana, there is one more doubt I think which you had sent. Can you please remind to me? Can you send it on the group, WhatsApp group, if possible? So as I told you, there is this WhatsApp group of live people which is going to remain till the batch is going on. That is primarily for the live communication. Then you all will get a link for the main group where you can join and continue to communicate for rest of the time. Yes. So boss, question number, kindly respond to me. Are we sorted? Question number 16th gets done on the Calci. Question number 17th is a homework question. 17th is a homework question, easy. You will have to do it at your own. Question number 18th. One second, let me figure it out. Seventeenth is homework, but only on Calci. You have to do it, but that will remain only in Calci, not in the notebook. Question number 18th is the homework that you will have to do in notebook. Okay? Proper question you will have to do in notebook. Only point is that I will want to tell you one thing. In question number 18, you would observe that we have to first calculate beta. The calculation of beta you will learn in the chapter of portfolio management. So for now, in this chapter, let's assume that the beta is directly given to me, because the calculation is so obvious that you will learn it in the portfolio management. So for now, I am writing that let's make use of beta directly because its calculation will be learned in portfolio management. Its calculation will be learned in portfolio management. Done. So 18th question, you have to do in homework where beta calculation you can use directly. Don't calculate beta, and then rest of it you will have to do an extremely easy thing similar to what we have done in the OutNotes. Perfect. Question number 19th is the great question that we're gonna do in the class right now. Boss, do you feel like taking a break first or doing question number 19 first? If you want, you can take a break. What do you want? Boss, come on. What do you want? Is there anyone in the class who has not liked the video yet? Despite, I think the efforts we had made to bring the clarity on this model were really great. Archana, so kindly manage it. Others want that we can do question number 19. We will do this question by writing it down in the notebook. Okay, so come on, super fast. Super fast. An investor considering to purchase equity share of LX whose current market price is 112. Fine. We have a share whose current market price is 112. The company is proposing a dividend of rupee 4 for the next year. Based on this line, can you tell me which year's dividend is this? Which year's dividend is this? Think and tell me. Read the line in your book. Tell me which year's dividend do you think is that? People? So for the sake of saving time, what I'll do is that I will use the timelines that I had previously made in my previous batch. Rest of the things we will do in the class by writing down. Only the timelines I will use previously made for the sake of saving time. And anyways, I'll give you that time that you make it yourself, right? So just a second, let me open the question again. 19th question on page number 14 is what we are doing right now. Okay, listen to me. So what it says. Archana, don't worry. For now, Archana, you have to understand it as a simple rule. Archana, in the moment, you have to understand it as a simple rule. What is the simple rule? You identify the point from where the growth rate is constant forever. Agreed? Once you have identified that point, you simply apply terminal value at that point. Simple. For now, without applying any logic. Are you clear? And once you calculate terminal value, you discount 1, 2, 3, 4 and the terminal value of 4. That simple it is for now, till your doubts get sorted. Perfect. So back to it. We were doing question number 19. So question number 19 says, in investing consumer purchase the share of CMP is 112. The company is proposing a dividend of 4 for the next year. As you people are saying, sir, this is the dividend of first year. So agreed dividend of first year is 4. LX is expected to grow at the rate of 20% for the next 4 years. Sir, I am getting confused in the language. When they say in the next 4 years, what does it mean? Is it that for the next 4 years after first year or next 4 years starting from today? I mean, is the growth of 20% from year 1 to 5 being the first 4 years? Next 4 years, or is it from 0 to 5 being the next 4 years? 0 to 4 being the next 4 years? We don't know as of now. Fine. The growth will decline linearly to 16% per annum after the first 4 years. So this gives me the clarity. After the first 4 year means that 20% growth rate will be first 4 year, which means starting from today, the next 4 year growth was 20, this 20, this 20, this 20 and this 20. Sir, let me tell you, develop this habit of creating a timeline in the question. It won't take more than 15 seconds to do it, but once you do it, the possibility of mistakes get avoided. Right? Sir, dividend growth for the next 4 years is 20. The growth rate will decline linearly to 16% per annum. Sir, I have to mark this question to be an ambiguous question, frankly. The data is missing. When they say the growth rate will decline linearly to 16% per annum after the first 4 years, it means that gradually, by the same percentage every year, the growth will come from 20 to 16. You know what is the data missing? They have not specified by what percentage will the growth rate fall every year. Will it fall by 1% every year, like 2019, 18, 17? Will it fall by 2% every year, 20 to 18, then to 16? Or will it fall by 0.5% every year, 20, 19.5, 19, 18.5, 18, so on? That has not been clarified. Sir, it says thereafter it will stabilize at 16% per annum indefinitely, which means growth will decline to 16 linearly after first 4 years. After first 4 years, it will decline to 16 and then the growth will continue to remain 16. Sir, then I have a forever constant growth rate. Investor require 20% rate of return. First of all, is it clear to you all what is the data missing? The data of what is the rate at which growth will fall is missing. I think this self note you don't have to write. You will receive the books where this data would be, this self note would be written, right? However, in your book right now, if it is not written, you may write it down that what is the ambiguity? What is the ambiguity? the data of how much will be the decline in growth every year is not given. Aligned to me? Why is this question an ambiguous question? Perfect. Fine. So, sir, this is the problem that we don't know. Fine, sir. Sir, you have to calculate the intrinsic value. What is it worth to purchase the share? That is also we will have to tell them, and the present value factors have been given. You know what is the point of learning in this question? Do you agree present values factors is given only to the point till we have to calculate the terminal value? Yes or no? What I'm saying, if I'm calculating the terminal value of fourth year, then I have to then I need the present value factor till 4 year. If I calculate the terminal value of third year, then I need the present value factor till 3 years. Hello, yes or no, people in the class, tell me. I'm not expecting that you all remember such things in the exam. But now when I teach you, with the time, with your revisions, you will be able to automatically connect to such things is what I'm saying. Boss, could you connect to what I said? Please tell me. Could you connect to what I said? Come on. Sir, if I have been given the present value factors of 7 years, then let me make some trials. For example, I know that it has to be brought from 20 to 16 over the years. Can I say the most natural assumption will be 1% every year? The most intuitive assumption is 1% 1 year per year. So let's try to drop it by 1% per year. So I know that for the next 4 year, growth rate is 20% per annum. Fine. Then for fifth year it will be 19, for sixth year it will be 18, for seventh year it will be 17, then 16 and then 16 forever. Agreed? That's how is the 1% drop every year. Assuming that this 1% drop is correct, let's assume for now. Let's figure out at which point should we calculate the terminal value. Observe the data given in the question. Okay. For now, let me remove it for your ease. For now, let me remove it. Observe the data given in the question and answer my question, at the end of which year, if you stand and look in the future, you will have a same constant growth rate forever, people in the class. What do you say? At the end of which year, if you stand and look at the future, you will have a same constant growth rate forever. Sir, it is very well visible at the end of 7th year, if I stand, my growth rate is forever constant at the rate of 16%. Do you all have the alignment with me? Are you all agreeing to me? Which means, do you agree, sir, I can calculate the terminal value 7? And if I calculate terminal value 7, I would need the dividend of 8th year. D8 divided by K minus G is what I need to calculate TV7. And then manually I will discount the dividends for the next 7 years. From D1 to D7 I will manually discount, and terminal value 7 is what I will manually discount. Means I need the present value factors for 7 years, and since I have been given the factors of 7 years, I can understand that my assumption actually was correct. Boss, this question gave you a very specific learning which sometimes does happen in the exam, that you have to make use of given data to a lot of times, eliminate the ambiguities of the question. Could I answer? Could I teach you that? What is the point of learning here? What is the point of learning here? Make use of the PVF data given in the question to crack it. See, I'm not expecting that you all must do it, but there is no harm in learning. I understand that the question is ambiguous. I understand that is institute's mistake. But if we have some way to crack it, why not to learn it, is my point. Boss, are we 10 on 10 clear? How should the timeline look like? Why did I assume 1% decline every year? And how is it validating through this particular data? Yes. So great. So let me tell you, we may take few more minutes to solve the question and it'll be too late for you to have the breakfast. Let us take a break. Let's meet back at 10:05 or 10, whatever you want. Now we have understood the question. Now solving it won't take time. I just have to create the table from 1 to 7, then 7 again. Find out the dividends and terminal value, multiply the present value factors, and finally calculate the discounted cash flow will be the answer to this question. We will do it in the class only. How much break do you want? 10 minute or 15 minute? Boss, come on. What do you want? 15. Okay. So please be back by 10:05. That is after which we continue this and solve a lot of practical question. Please be back by 10:05. All right, everyone. See you all at 10:05. Bye. And don't give me surprise that sir, we have already solved it at our own. We will do it in the class. Bye. People in the class, are you all there? Please tell me. Back. Just give me a minute. Let me attach my mic for better. Yes, now there. People, back please. Yes, shall we start? So I think we have to do now timeline presentation we are comfortable with. Now we have to do the actual presentation for the examiner. The main point of learning in this question was this ambiguity and the point of learning that we have written. And then we have also drawn the timeline. Perfect. I guess now you people must have started liking this timeline approach that we follow. Yes. So great. People, are you people done with this timeline drawing? You'll let me know first of all. And then we can start doing it, the examiner's presentation. What is the status? Are you people done drawing this timeline or not yet? Yes. Oh my God. Some people are back now. So it seems that you guys are lagging. A few people are lagging a few seconds. So kindly come to the latest point on the YouTube video, come to the latest point where we can start to have the live communication. Please quickly tell me. Archana, as I said, for now, you assume it. I will answer your question just after the batch. Okay, I understand. But you'll have to please wait for the day to batch to get over. Yes? So fine, sir. The basic logic was, we see that at this point, if we stand, we see that the growth rate is constant forever. And there is no harm in applying Gordon's model at this point, because Gordon says the growth rate has to be constant forever. Yes. So since the growth rate is now constant, we will have to apply terminal value 7. Everyone in the class, was the logic of this particular question or concept clear to you before we start to solve it? So how do we have to solve it? Really simple. Sir, we have to draw a table where first column will be year. Then next column, if you want, you can create a column of growth. Yes, I will tell you why. The next column will be cash flows. Next column will be present value factor. Then next column will be DCF. So 1, 2, 3, 4, 5, 6, 7. 7 is how the things will look like. Column is growth. First year cash flow will grow at the rate of 20%. So next 4 cash flow will be 20%. So 20, 20, 20 and 20. Then it will be 19, then it will be 18, then it will be 17. For 7th year terminal value, don't write down the growth, but I know it is going to be 16%. Fine, cool. What about the cash flows? Let's make use of calculator. My first year cash flow is 4. Then 4 plus, keep on adding the growth rates. 4 plus 20% will be second year's cash flow 4.8, plus 20% will be 5.76, plus 20% will be 6.912, but I have to write down only 6.91. On my calci it is 6.912, plus 19% is 8.23 on a rounded off basis, plus 18% is 9.71, and then plus 17% is 11.36. Guys, are these numbers correct? Someone please confirm. If you people are here, please confirm if these numbers are correct or not. In fact, let me not wait. Yes, they seem to be correct only. They seem to be correct only. So I'm done with I'm done till the dividend of 7th year. Now I know that to calculate terminal value 7, I need the dividend of 8th year, right? The best way to present it is really simple. 11.36 being the dividend of 7th year into 1.16 being the growth rate into 1.16 being the growth rate to make it the dividend of 8th year. So D7 into 1 plus G divided by what is the cost of equity 0.20, what is the growth rate 0.16 divided by K minus G, give me what terminal value 11.36 into 1.16, sorry 11.36 plus 6, 11.36 plus 16% divided by 0.04, 329.44 is the terminal value. 329.44 is the terminal value. Okay, I'm shifting a bit the present value factor and DCF. Are the present value factors being given in the question? Yes. So please write down the present value factors given in the question. For 7th year, you have to do it twice. You have to write down the twice. Once for the dividend of 7th year and then for the terminal value of 7th year. Then you calculate the DCF where you have to round off the DCF till 2 digits after the decimal point. So what is the way to do it is really simple. Cash flow into present value factor M plus. Round off the DCF. In the notebook you round it off. But in the calculator you say M plus. This into this M plus. This into this M plus. This into this M plus, so on till the end when you do. Write down the individual number and memory recollect will be automatically the total. Are you people aligned? I'm trying to guide you every possible thing in this batch. This is a regular batch. You will get to learn every possible minuteness, right from presentation to calculator tricks to everything. Come on, please, please, please. So please do it. Waiting for your responses. Waiting everyone. DCF for your information, just a reminder, rounded off to 2 digits. I'm writing it down for your reference. Okay. But whatever you calculate, just put it to M plus, M plus, M plus, and then ultimately memory recollect. Once you have the answer ready, please let me know. I'm waiting for it in the chat box. Super fast. Come on. I hope you all have the books. Obviously, you'll be able to see the DCF from the book. Shruti says it is 114.95. Shruti, when you press memory recollect, there is a possibility that you have something, for example, 114.9489 something, for example. So you rounded off to 114.95. So the total, when you place memory recollect, whatever is the number, you round it off to 2 digits after decimal point. So it is 114.95 or 114.96. First student say it's 114.95, then second student say it is 114.96, then third student say it is 114.97. What is going on, people? What is the final answer? I mean, we can make this effort in the class once to crack it, but after a point you all should be aligned that what should the process be. Once we all learn the process correct, all of us should have the same answer. Are you getting? Yes, Priya, Archana, Shruti. All of us have done the same thing. All of us have the same numbers, aligned sir. All of us have the same present value factors given in the question, aligned sir. This into this m plus, this into this m plus has to be same for all of us. Then memory recollect also has to be same for all of us, right? So for now I am writing 114.96. People, are you all there? Actually, I got disconnected. People, are you all there? Can you all hear me now? I got disconnected. So what I was saying, please respond to me once if you're there or not. Hello, can you all hear me now? One second, let me ask you. You can hear me now, right? So please come to the latest point, latest live point where we can connect. So what I was saying is that now onwards, since all of us are clear with the process, how exactly is the process, right? Make sure that now onwards we have the same answer. Perfect, great. So with that clarity, with that discussion, question number 19 gets done. For question number 20, right, I would want to give it to you as a challenge, right? And in the next class, you remind to me of it. Then we discuss. Hello. Priya, I was telling you that you all should get the same answer, okay? Because the process is same, the inputs are same, everything is same. Perfect. Question number 23 is a challenge question. Sir, this question 20 looks similar to question number 19. So let me tell you what Institute does. Institute has a habit of, modifying the older question. They take these questions, right, which was there previously asked in May 19, November 20. They modify the question. Okay, they modify the question and ask the reverse calculation question in the exam. So in May 23, they did ask this particular question. People, are you ready to take this question as challenge? Because the point is really simple. If we are not able to solve the challenge questions or new or different or reverse calculation or tricky question at home, how would we be able to solve it in the exam hall, knowing the fact that at home we don't even have the time pressure? I'm giving you limitless time. You make first trial, second trial, third trial. Just try to make sure that somehow you crack this question number 20. This is one of the ways to make you people more capable of solving even the newer questions. Gradually, as you are able to solve in your entire classes all the challenge questions, or most of the challenge questions, if you try, I'm not asking you to get the answer, but if you try, I'm 100% sure you will evolve. And when we evolve, we get confident, and then we become capable of solving those questions even in the exam. Yes or no, everyone, 20th question, are you ready to take it as a challenge? Boss, please answer it. I will. Priya, I'll take you to that question 19 again for a moment. But for now, 20th question as a challenge, are you ready to take it? Please respond. Recorded people, live people. Now is a request to recorded people. If you are able to solve this question, or if you try this question, which you must, of that trial, of that effort that you have made on the notebook, you have to send a picture of it to me, right? Sharing, that's a sort of a challenge question. This is how I have tried it. If you get the answer, share that. If you don't get the answer, it's okay. But share it with me on WhatsApp your efforts. Right? I have given my WhatsApp number already to you, 70457 48955. Generally for doubts, we have the Telegram group. But otherwise, if you feel like sharing anything to me, you can do me on WhatsApp as well, Telegram as well. Perfect. Share the screenshot of your efforts with me, right? In the live class tomorrow, people in the class, we will try to figure out if you could solve it, not solve it, what is the learning, if there is a need to solve it in the class, all that we do tomorrow. But listen to one particular thing. First, you complete all the older backlog. When you solve other questions at home, which are homework, etc., you get a sense of it, you get a comfort on the concept, and then you try these challenge questions so that the purpose gets solved. You randomly try it, you are not able to solve it, it will decrease the confidence, reduce your confidence. Perfect. I remember that there was one older question which I had given to you as challenge. Can you help me recollect which was that question, challenge? There was one question I had given to you as challenge. Question number 19 was the challenge question. What is the status of question number 19? Could you people try? Could you people manage time to try question number 19? Sorry, 9th. Come on, quick. Yes, no. This one I was not expecting you'll be able to do it, but what I've given today, I'm expecting you'll be able to do it if you try. And even if you don't get it, it's not my point. My point is you make an effort. Everyone in the class, be strictly clear. I mean, be very clear. You want more time? You want me to discuss it now? You tried it, you didn't try it, what is the status? If you missed it to try it, I'm ready to give you one more day. You try it in the next class, we discuss it. Come on, super fast. Hello. Quick. No waste of time. You want a day? Take it. Question number 9th is challenge, remember it. Then today's question is a challenge question. You make an effort and I will highly appreciate it. Now question number 21. A brilliant question that is going to teach you a lot of things is what we are discussing now in the class. Yes. Question number 21, a brilliant question that is going to teach you a lot of things. Shall we start with this question? X Limited, a shoe manufacturing company, it is all equity financed, has a paid up capital of 10 lakhs. Is a company which is all equity financed, there is no debt in the company, has a paid up capital of 10 lakhs, where price per share, face value per share is rupee 10. Not price, it is face value. X Limited hired Swastika to analyze future earnings. Sir, valuation is present value of future cash flow. So unless I know the future cash flow, will I be able to value? No. So we have hired a company, Swastika, to value us, to analyze our future cash flow. The report of Swastika says the earnings and dividend will grow at the rate of 25% for the next 2 years. For the coming 2 years, the earnings and dividends of the company will grow by 25%. Fine. Earnings are likely to grow at the rate of 10% from third year and onwards. Sir, first 2 year earning and dividend will grow by 25%. But from third year, earnings will grow at the rate of 10% from third year and onwards. Fine. No information regarding dividend has been given. Further, there is a reduction in the earnings growth. Dividend payout will increase to 50%. Sir, as the earnings growth reduces from 25 to 10, first 2 year earning grow by 25, but then next year earning grow by 10. When the earnings will grow by 10, the Dividend payout ratio will increase to 50%. At present, there would be some payout ratio. It will increase to 50%. The other data related to company is as follow. Right from year 2010 to 2014, EPS of the company has been this, dividends of the company has been this, the share price has been this. Assuming that tax rate 30% has no use. In the entire question, tax rate has no use. Post-tax cost of capital 15. Sir, I have been given the cost of capital, but I need the cost of equity. Sir, since we are all equity financed, my capital cost is equity cost if you realize. Since I am all equity financed, cost of equity is cost of capital, K is everyone, 15% is what I get. Cool. Sir, we have to value the company. I am helping you people draw the timeline. Okay? I'm helping you people draw the timeline. I will draw for you people a rough timeline, okay? And then I will copy paste the original timeline which I had drawn, okay? Give me a minute. I'm just drawing right now for you guys a rough timeline. Page number, which page number? 16 page number is this question. Okay. In your book, if the page number are here and there, for example, it's 17 or 15, make that adjustment accordingly. People, let's draw a rough timeline. No one draws it right now, okay? The focus is to understand it. Sir, if I talk about EPS, first 2 year, year 1, year 2, EPS grows at a constant rate. At what percent? Sir, 25%. Agreed. 25%. Year 1 and 2. Year 1, year 2. Then from year 3 and onwards, which means till infinity, the growth in EPS will be 10%. Can you people tell me, at the end of which year, if I stand and look at the future, I have a constant growth rate forever? Come on. You're going to like this question that I can tell you. At the end of which year, if you stand and look at the future, you have a constant growth rate forever is my question to you all. You answer, you learn. Simple way. You answer it, you learn it. Come on, everyone. Each one of you would think, sir, at the end of second year, if we stand, we look at the future, we have a constant growth rate. My next question to you all. Which means, can I calculate terminal value 2? Which means, can I calculate terminal value 2? Yes or no? Come on. Is my main question actually. Which means, can I calculate terminal value 2? Come on. Sir, yes, that is what alternative 1 has taught to us. But the point, Archana, I would appreciate, and everyone else, you should know, what matters to me is not the growth of EPS, but what matters to me is the growth of DPS. Please always remember, the growth in dividend is what will matter to me, not the growth in earnings, which is why if you are taking your decisions, looking at EPS and saying that yes sir, the growth rate has become constant, let's apply terminal value here, sir, you have altogether started the question with the wrong mindset, because what matters to me is the DPS of the company, not EPS, which is why I have to, before that, create people in the class a chart of DPS. Okay, so I think I was initially thinking to create a copy paste the chart from my previous batch, but I think let's create it ourselves. So let's do it together. People in the class, you draw it till this point and then we do it together. Come on. You draw it till this point, then we do it together, we learn in a better way. Because when both of us do it simultaneously, you learn more. So come on, draw it, then we'll do it further. Please, faster, quicker. So that you get that trust that sir knows how to create a timeline. He is not only copying pasting it. Come on, when you've drawn it, let me know. You must have now. It's easy, yaar. It's easy. Sir, what about DPS? So if I talk about dividend per share, it says that the dividend for first 2 years will also grow at the rate of 25%. So blue color is dividend. Yes, it will also grow at the rate of 25%. Right? Then in year 3, when the earnings growth rate will fall from 25 to 10, then payout ratio will change to some percentage. Sir, which is how much? Payout ratio in year 3 will change to what percent? It will change to 50%. And depending on the payout ratio, will be the amount of my dividend. Yes, will be the amount of my dividend here. Sir, since in the first 2 years, the growth in EPS and the growth in DPS is same, can you lead to some conclusion based on this particular observation? That in the first 2 years, since EPS and DPS growth is same, does it make you people conclude something? What do you say? Does it make you people conclude something? Come on. Quick. Yes, sir, it does. It helps us conclude that since the growth from year 0 to year 2 is same as 25% per annum, it means that the payout ratio of 0 year and 1 year and second year is constant, as same, is not changing. Sir, how much is the payout? Please observe the dividend, if you see, is 9.6, right? And the EPS, if you see, is 9.6 of the year 2014, right? Which is 0 year for me, and the DPS for the same point is 3.84. Although I don't need the payout ratio, but if we calculate how much will the payout ratio be, 3.84 divided by 9.6 give me 40% payout, although I don't need it. But now I realize the payout ratio for the next 2 years will continue to remain 40 because EPS and DPS growth is same. And after that year, sir, when the EPS growth turn out to be 10%, the payout ratio will become 50%. Yes? So fine. Sir, let me first of all calculate the EPS for the next 2 years and the DPS for the next 2 years. 9.6 plus 25% is 12. Fine. Plus 25% is 15, right? And plus 10% is 16.5. These are the EPS for the next 3 years. Sir, what is the DPS for the next 2 years? Sir, same 25% growth. 3.84 plus 25% is 4.8. Fine. Plus 25% is 6. Cool. My next question to you. Can I apply the same growth rate of 10% even to the dividend? Yes or no? Can I apply the same growth rate of 10% even to the dividend? What do you think? Quick yes, no is my question. Sir, ultimately you have to realize that what matters to me is the growth of dividend, which is why we are applying all our brains to calculate the future dividends and its growth. This is just the base to do the information. EPS just the extra information to calculate the DPS and etc. numbers. What ultimately matters to me is the growth of dividend, right? First 2 year I have 25% growth. Then what is my dividend growth? Is it 10%? People in the class, is it 10%? No, sir. Since we observe that payout ratio here, please observe, since we observe that payout ratio here is 40% and the payout ratio is changing from 40 to 50, the growth in EPS will not be the growth in DPS. That is 100% clear to every single student. But sir, can we somehow calculate the dividend here? No, no, no. We cannot calculate. I am removing this line and putting a question mark here that I cannot calculate the growth of dividend. Directly using D2, I cannot calculate D3. We had learnt it. In the outnotes, we had marked it. The only way to calculate the dividend is first calculating the EPS of next year, then the DPS of next year. Do you agree to my point? Sir, 16.5 is the EPS of next year, multiplied by 50% is 8.25 is the DPS of next year. Yes or no? 8.25 is the DPS of next year. I cannot directly calculate it. DPS I cannot directly calculate if you observe. Yes, let me put across like this. I cannot directly calculate. But yes, sir, fine. What's ahead? For example, EPS continue to grow by 10%. So 16.5 plus 10% is 18.15. Fine, sir. 18.15. Cool. Sir, what is going to be the payout in the future years? Sir, the payout will continue to remain 50%. Fine. Do you people obviously understand out of it that if payout is now maintained again, see, there was one particular year when the payout was changing from this point to this point. Before that payout was constant, after that payout is constant. Now the payout continue to remain 50%. So if the payout between 2 points the payout of 2 points is same, then the growth of EPS and DPS of between those 2 points is also same, which means now can I say that now onwards my EPS will grow at the rate of 10% forever and my DPS will also grow at the rate of 10% forever. Now till infinity. People, are you all able to connect to me? Come on. The clarity of timeline is the most important thing that we focus on, which is going to give you the clarity. Pause. If you like this approach where we are trying to gain the clarity, you are in the right direction. We are aligned with each other. This is how even I like to teach. Yes, boss? So this is now clear. Sir, initially I asked you a question, can I calculate the terminal value here? You said no, because we cannot look at EPS, we have to look at DPS. So now I'm aligned to you, we have looked at DPS. First of all, do you realize it is a variable growth model? Yes, sir. First year 25% growth, second year 25% growth, then third year I don't know what percentage growth, then fourth year onwards it is forever 10%, which means growth is variable. So variable growth model, agreed. Next question. At the end of which year, if I stand and look at the future, I will have a constant growth rate forever. Identify whether it is year end 1, 2, 3, 4. Where do you stand and look at the future? You have a constant growth rate forever. Sir, if I stand at the end of second year, then I don't have a constant growth rate forever. Second to third is something and then third to fourth is forever constant. Which means, do you people agree? Do you people agree that I should stand at the end of year 3 actually to observe that the growth rate is actually constant forever? Hello? At the end of year 3, I should stand and I can say the growth rate is constant forever. And now I'm going to particularly teach you when do you apply alternative 2. Sir, You stand at 0 point here. Yes, sir. Is it with a smiling face? Show me a face. Sir, you stand at a 0 point. I see that in the future years, earnings growth has been given to us. And we also observe that the payout ratio is changing in the future years. So now I make my final statement. Please listen to it. Whenever the payout ratio in the future year is changing, whenever in the future years this payout ratio is changing, that is when you apply alternative to people in the class, which means even if the growth rate is constant, from this point, right? But we will have to, everyone in the class, calculate the terminal value a year back. We have to come a year back, and that is when we calculate terminal value, which means we will calculate terminal value to people. Do you agree with the logic of alternative 2? What was the logic of alternative 2? Sir, whenever we see the growth rate forever is constant of my dividend, I come a year back, and that is when I calculate terminal value, and that is what alternative 2 was. But sir, how do you know that whenever the payout is changing, we have to apply alternative 2? This is my observation of institute's question. I have observed institute's question. I have identified that whenever payout is changing, institute do apply alternative 2, and that is why we also apply alternative 2. Even if you apply alternative 1, you will get the same answer, but we want to secure even the step marks. For example, if you calculate terminal value 3, if I calculate, examiner calculates terminal value 2, your answers will not match. Terminal value answer will not match, the final answer will match, but we want to secure even the step marking, which is why we will do terminal value 2 calculation. Am I 10 on 10 clear to every single student? Why are we applying alternative 2? First. Second, as per alternative 2, we have to calculate terminal value 2. Please, how much out of 10 every single student is clear? If you are literally clear on this, then this video again deserves a like. Come on. Boss. In fact, I would request all the recorded people, because live people, you're sitting live, you won't be able to comment, I think. I don't know how does it work. But recorded people, if you are satisfied, you will have to comment down what your actual feedbacks are. Are you liking this approach? Is everything set? Is everything fine? Perfect. Sir, if you are clear, let me tell you. For TV2, what do you need? Sir, we need the dividend of 3 divided by k minus g. For TV2, I need the dividend of third year divided by k minus g. Then it will give you TV2. Yes. Then along with that, I need the dividend of first year. I need the dividend of that second year. Is that simple? The solution has become now? Yes. The thought process takes time, because we want to have the clarity. The solution won't take time, right? Sir, what is the solution? The solution is really simple. I will say year. Then one more point of learning this question. So this question has multiple learning. I am teaching you right now. At the end, I will conclude everything. The first learning of this question was alternative 2. So first learning of this question was, so all the learnings I will conclude towards the end. Right now, let me share individual learnings. Sir, do you people agree? I cannot directly apply growth in the dividend, because in this particular year, the growth of dividend is unknown. Since you cannot apply the growth in dividend, you will have to compulsory go by way of EPS that you know. That, sir, we have to first know the EPS of every year. And then in a particular year, I will have to multiply the payout ratio to find out dividend. Sir, that is 100% clear to us. Correct? Correct? Let me mark it for you. What I'm talking about is this particular scenario. Wait. What I'm talking about is this particular scenario. This one. I have to do this, and then I have to multiply the payout ratio. That is only how I can calculate it. Although even if let me not make it complicated, let me look it simple. When I don't draw an arrow here, you understand it, I have drawn an arrow like this. Perfect, that is how you will have to understand. Which means if I calculate the column of dividend directly, if I make the column of dividend directly, will I be able to? Will I be able to directly calculate dividend? No. The timeline is for your understanding, but to the examiner, how will you present? You will present it with the column of EPS. Leave a column. If needed, we will create a payout column. Based on your comfort, we will decide if there is a need or not. EPS into payout is dividend, or maybe then you can create a D and terminal value column, then present value factor, then DCF. Sir, I have year of 2015 as my first year, then year of 2016, then again year of 2016. Sir, why? Because 15 dividend, 16 dividend and 16 terminal value is what I want. Perfect. Sir, how much is my EPS? Sir, 9.6 plus 25% give me 12 plus 25% give me 15. Sir, how much is the payout? It is 40%. Even if you don't write it, it is fine, because you know that even the dividends will grow at the rate of 25%. So 3.84 plus 25% you know is 4.8 and you know is 6. This column, let me mark it with let me draw it with the blurred ink with the pencil because it is optional. That is your choice, your comfort. Payout 40%, 40%. Now, do you agree the next year's dividend for 2016 to calculate terminal value, I need the dividend of 2017. How do you calculate dividend of 2017? Really simple. I need dividend of 2017 divided by K minus G. I'm specifically writing formula for your comfort. Sir, 2017's dividend I calculate as 2016's EPS into growth rate, the effect of growth rate into the payout ratio. Agreed? That is what I will do. EPS of 2016 is 15 rupee into how much is the growth rate in EPS for this particular year? 10%. How much is the growth rate? It is 1.1 multiplied by how much is the payout ratio then? It is 50%. Automatically it gives you the dividend of 2017 divided by cost of capital of 0.15 minus forever growth rate of 0.10 give you terminal value of how much? 15 into 1.1 multiplied by 50%, right? Divided by 0.05 give me terminal value of 165. Boss, are you all aligned with the terminal value of 165? What are you getting as the answer? Come on, tell me. Boss. So now we like it. We have the dividends for the next 2 years and the terminal value of second year, which is based on the dividend of third year, where third year's dividend is not calculated directly using dividend growth. That is calculated as EPS of this year, which is 0 year EPS into the growth give me next year's EPS into the payout gives me next year's DPS. If you are aligned with the answers, multiply 3-digit present value factor to it at the rate of 15%. Take it till 3 digits, multiply it with the DCF, do M plus, give me the final answer. The final answer has to be rounded off. Individual answer you may not round off, final answer you need to round off and tell me. So for example, 1.15 divide equal to is 0.870. 0.870 is equal to 0.756 is equal to 0.756. Agreed, sir? Okay, let me put it, shift it to the left because we are lack of space. Fine. So 4.8 into 0.870 M plus, which is 4.18. Then, which is 4.176 actually, calling it to be 4.18. 6 multiplied by 0.756 M plus, which is 4.536. So 4.54. Then 165 multiplied by 0.756 M plus, which is 124.74. What is memory recollect? 133.45. People, please confirm if I have not made any calculation mistake. Are the calculations correct? I mean, I hope there is no mistake. Calculation mistake at least. Concept mistake is not there, that I know. Are the calculations correct? Are you people aligned correct? That's how we get the same answer. How much out of 10 are you people clear? Hello people, I'm not able to receive your chats. Is everything fine? Is everything all right? Is it that you people are writing it? I wanted to say point of learning. I ended up writing point of earning. Ten on 10. Perfect. So let me summarize to you what all has this question taught to you. First thing it has taught to you is that it's really interesting. First thing it has taught to you, we like this summary so that it gives you the clarity further. First thing it has taught to you is that you, while deciding whether, like while deciding where you have to calculate the terminal value and everything, you never look at EPS. Yes. Where is the thing? One second. Oh, this is the previous thing that we had drawn. This is my previous batch chart. This is this batch chart. Perfect. The only thing we have not done is that I have not done this particular thing. That's all I have not done. Everything else remains the same. Right? Any which ways, I know you people are comfortable. So let's understand. Sir, first thing it has taught to you is that whenever you have to decide that where do you have to calculate terminal value, you don't look at EPS. On the basis of EPS, if you look and decide, you will end up getting a correct answer, but that is illogical. Do you all agree to my first point? You will end up getting a correct answer. That 25, then forever it is 10, which means terminal value should be at year 2. Hello? You will end up getting a correct answer, but that is illogical. And you know the secret. It has happened with me. A lot of students, literally a lot of students who come to me in the power batch, they are the people who have taken some other batch previously somewhere. They end up saying that we never knew this logic of alternative 2, that it is illogical to look at the EPS, it is logical to look at the DPS, and on the basis of DPS, when we look, since they have not been taught, they end up answering correctly. But the logic that they get to know at the end, that we have to look at DPS, but you have to apply alternative 2. The logic of that is already clear, that the growth from 2 to 3 can be different. 3 onwards growth has to be forever constant. All that they get to know in the power batch, and then they get to know that, okay, we do terminal value because we look at the dividend and we apply alternative 2. Looking at the EPS is incorrect. We end up making some mistake at some point if the question gets modified. Perfect. So first thing, never look at EPS, look at DPS. Learning number 2, since the payout ratio in the future year is changing, you cannot directly calculate the dividend of next year. You have to calculate the EPS of next year and then multiply the payout ratio. This is second learning. Don't worry about writing them down. All of them are written. I will tell you where. Third learning. Since the payout ratio of future year is changing from 40 to 50, you will have to apply alternative 2. This is learning number 2. Learning number 3. Learning number 4. The presentation slightly changes from EPS From year to dividend directly, the presentation changes to incorporate two more columns of EPS and payout if needed. EPS 100%, payout if needed. This is the fourth thing about the presentation. And I think everything else is same. There's a slight disturbance, sorry, some construction is going on, so kindly consider it. I can say fifth learning was applying this maths, although I have explained it here, but how do you mathematically apply it is like this. So let's figure out if we are able to write down all these learnings or not. Let me go to the outnotes first. Sir, can you read this particular line? Read it at your own. If the dividend payout ratio in the future years is changing, then growth cannot be applied directly on DPS. Such growth is rather applied on EPS, and then DPS is calculated using dividend payout ratio and EPS so calculated. Requesting your responses. This note which I have tried to write at my own, is it sufficient enough to understand what I'm trying to teach? Requesting your response. Let me give the reference of this particular question number 21 on this. There will be more questions of which we will give the reference, but at least 21 let me give the reference. Super fast, quick. What I've tried to explain, could I explain? Hello? Yes? Boss, what is happening? You have all your rights to say no. If you say no, it is fine, but you have to say something so that I can proceed ahead. Got it. Next learning, alternative 2 we will apply. See, preferable is alternative 1. General case alternative 1 as we have been doing. Alternative 2 will apply to the questions in which dividend payout in the future year is changing. That is again an example of question 21. Two learnings we have written down. Learning number 3 was not looking at EPS and looking at DPS. I think it is quite an obvious learning. We have already written down previously that you have to look at the growth of DPS because we are discounting DPS, not EPS. Okay, that is an obvious learning. Then the learning was alternative 2 application. That is fine. Then one more learning we need to write down in the question here only. Or I think I should make you people write it down here, because all this relates to the situation when the payout ratio is changing. If the payout ratio is changing, then one more situation, if the payout ratio is changing, let me write it down in continuation to this. We will write, therefore, presentation become years, then EPS, then payout if needed, then dividend or terminal value, then present value factor, then DCF. Isn't it on the very next page where you have learnt alternative 2? On the very next page is this note. Hello? Oh, Priyanka, you have not received the notes yet. Got it. On the very next page, where you do alternative 2, immediately after this page. So Priyanka, don't worry about this. After every few days, I will upload the OutNotes updated copy to your drive. So once you receive the book, take out a few hours, right? Write down everything from the scratch in your OutNotes looking at this particular PDF which I upload on the drive. Hello? Archana, are you understanding? Getting it, please? So this is the reason you may be finding the lecture slow, because when you don't have the book, you don't have to write it. Initially, some of you found the lecture to be really slow because you don't have to see it, you don't have to write it. Most probably, this is my just guessing it. So I think everything related to that question we have updated here. Cool, we are all sorted. So are you people understanding the approach? The approach is not just to teach you in a perfect manner right now, but also to make sure that everything you have learned is somehow captured also. Because once the classes are over, you won't have my learnings in your brain. Majorly, you will have what is written in the book. This become your Bible. So which is why we are trying our best to make this book really the best, really the most comprehensive, really something which has everything relevant which I've spoken in the class. This is the approach. With that, we try to create the outnotes and we try to use them in the class. Question number 21 gets 10 on 10. People, see, 21 question has B part of the question. Let's really quickly do it. Sir, once you have the price, look at this, what's happening. Sir, they are saying you have to also calculate the P ratio. So once you calculate the price, which is this, P ratio is price divided by, like MPS divided by EPS will give you the P ratio. Let's quickly do it so that we don't have to wait. Super quick. Question 21, this was part number A, gets done. Part number B is P ratio. So in part number A, also write down expected market price. Sir, why are you writing down this conclusion? Because nowhere in this table I have told institute, nowhere in this entire table I have told institute that this is my expected market price, which is why I have to separately write down the conclusion. Expected market price which they asked is rupee 133.45. Then B part of this question, P ratio. What is the formula of P ratio? Sir, it's really simple. MPS divided by EPS. Sir, what is MPS? 133.45 divided by, what is EPS of the company given at 0. The price of today, the EPS of today. Please remember the most basic thing, 9.6. So 133.45 divided by 9.6 give me 13.90 times. What is the unit of P ratio? 13.90 times. Similarly, B part of one of the previous question is also missing. Let me take you there. So please complete this one first. So easy. 13.96. Please update the unit as well. Times 13.96 times. Done. This gets done. Sir, to one of the previous questions, so 20 was challenge, but 19th question B part we have not done. So B part of 19th question, A part was valuing the share, B part was commenting whether it is worth or not. Since the actual market price of the share was 112, listen to me, actual market price given in the question of the share is 112. The price according to us is 114. So we say since market price per share, which is 112, is less than the intrinsic value of 114.96 that we have calculated, therefore it is undervalued and worth to purchase. Therefore, it is undervalued and worth to purchase. So kindly consider writing that. Fine, boss. Yes, 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 great. So 19th entirely gets done. 19th entirely gets done. 20th is challenge. Let me write it down. 21 is what we have done. Really a great question. Next question onwards, we'll figure out in the class how to proceed. Right, for now, for the day, this is all we have done. The next question will surely be in the application. That's what I want to tell you. Right. So I hope you people really liked the lecture. You people are enjoying how this chapter is. All set? Can we please call it a day? Any other doubt if you want to ask? If you want for your revision, I will share these annotated out notes for now on WhatsApp. I'll share these out notes to you for your revision on annotated out notes on WhatsApp. Done, everyone? So yes, let's call it a day. Bye bye everyone. See you all. Take care. Thank you so much for watching up this lecture, for being here live. Sharing to you on WhatsApp. Okay. Bye guys. Take care. Thank you so much. I'll see you. Bye people. Yes, Priya, I will do it. Shruti, thank you so much. Archana, thank you so much. Harshita, thank you so much. Thank you guys. Take care. Everyone else, thank you. Bye.